the record, it may be a good day to buy DJT stock if you can get it in the first, right in the first thing, because that was considered sort of a proxy for his chances, and now the fact that will obviously be tied to his administration, that would be something favorable. Okay, so that's likely to be extended. What else was related to that? So when this law has changed, I think for the most part it'll stay unscathed. They talked about lowering the tax rate for corporate taxes. I don't think they have the votes for that. I don't think it's that likely. I think it's more likely to stay at 21%. There was talk about raising it back to 28%. That's not going to happen. There's also talk about obviously having additional tax on wealthy individuals. I think that's off the table. I think for the most part that tax law is going to stay intact for the most part. Obviously I'm not a sage, but that's sort of my thoughts on that issue. So the estate tax exemption should stay similar, the bracket should stay similar. There likely will be some movement regarding the state and local tax deduction. There's been talk on both sides regarding increasing maybe credits for children. That's something that J.D. Vance has been promoting, so I do think that there could be some expansion of tax credits for children and child care, right? So that's something certainly to take a look at. So the whole objective isn't just to get into every aspect of tax, but the point is that when you think about a change in administration, whatever it is or whatever it will be, it's an opportunity, and it's when we look at planning. So the idea is that when we have some clarity on what those laws will be, you try to take advantage of those laws to utilize that to help individuals, right? Certain industries, let's take a look at that, right? So there will be more of an emphasis on energy. There will be less of an emphasis on green energy, certainly. There's also likely to have less regulatory hurdles. I think you'll see, and this would have happened, I think, in both administrations, where there will be an increase in construction in the home building industry. So, but let's talk a little bit about the elephant in the room regarding that, which is interest rates and fiscal policy. So both candidates really didn't seem to have any concern about how much money they were spending. And both independent analysis said that they were going to raise the deficit. So what does that mean for inflation? What does that mean for interest rates? That if Trump does raise the tariffs, okay, regardless of what he says or whatever, it's a simple math problem, okay? When you think about what stuff costs, right, and how things are priced, it's very simple, right? It costs X amount of dollars to make it, whatever it costs to ship, taxes, administration costs, right? Then you're going to add in either a cost of capital, a rate of return, or your expected profit margin. And that's your price. It's that simple. So if you have a tariff on imported goods, yes, the seller may take a little bit of a hit on their profit margin, but often their profit margins may be 5 or 10% anyway. There's only so much of a hit they can take. Manufacturers and businesses aren't going to sell long-term their products at a consistent loss. They're not, right? So that TV that you bought at Best Buy for $300, maybe it cost $250 to make, and then there was some shipping costs and a profit, and that's where you get your $300.